The day Marcus got his promotion, he did something that felt completely normal. He logged into his banking app, found the income update pop-up that had been sitting there for months, and this time, he actually felt good about filling it in. He typed in his new salary, hit confirm, closed the app, and went out to celebrate. 3 weeks later, his credit card company called, offering him a premium card with a $495 annual fee. A week after that, a personal loan offer arrived in his email for an amount that was almost exactly 3 times his old salary. His credit limit jumped by $8,000 without him asking. Marcus thought the bank was rewarding his success. What actually happened is far more interesting and a lot more uncomfortable. Marcus had been with the same bank for 6 years, good customer, never missed a payment, paid his credit card balance in full almost every single month. He was the kind of customer banks are supposed to love, reliable, consistent, zero drama. That evening, when he logged in after his promotion, before the page even loaded, the pop-up appeared. Clean design, friendly font, a little progress bar at the top that made it look like a required step. Help us keep your account up to date. Please confirm your current annual income. His old income was pre-filled in the box. He'd gotten a significant raise. He felt good about it. He typed in his new number, almost double what he originally reported, and hit confirm. It took 11 seconds. Over the next 4 months, 3 things happened that Marcus never connected to those 11 seconds. His credit limit was raised, without him asking. Offers for premium cards, with $400 and $500 annual fees, started appearing every time he logged in. And the interest rate on a personal loan he applied for came back higher than he expected, even though his credit score had actually improved since his last loan. He thought these things were unrelated. He thought the bank was just doing its job. What he didn't know, and what almost nobody tells you, is that the moment he typed that updated number into that little box, an algorithm woke up. It recalculated his profile. It reassigned him to a new category, and it began optimizing the entire relationship, not for his benefit, but for the bank's. This video is about what actually happens when you tell your bank your income, why they want it so badly, how they use it in ways you will never see, and most importantly, what you should do instead. Because that pop-up is not what it looks like, and once you understand what it actually is, you will never look at it the same way again. Let's start with the pop-up itself, because the design of that thing is not accidental. Banks spend millions of dollars on user experience research. They test button colors, they test font sizes, they test the exact wording of every message that appears on your screen. Every single element of that income update pop-up has been engineered, deliberately, to produce one outcome: you filling in that box and hitting submit. Notice how it almost always appears as the first thing you see when you log in, before you can do anything else. That placement is intentional. You arrived wanting to do something, pay a bill, check a balance. Now there's this thing in the way. Your brain is already in task completion mode. The path of least resistance is to just fill it in and move on. Notice how the old income is often already pre-filled. That's called a default bias technique. When something is already filled in for you, it feels more like a confirmation than a decision. You're not entering new information. You're just updating an old number. Lower stakes, less thought. Notice the language. Help us keep your account up to date. Not give us your income. Help us keep things accurate. It sounds cooperative. It sounds like maintenance. It sounds like the responsible thing to do. And then the progress bar. That little bar across the top that makes the pop-up look like step 2 of a required process. There is no required process. That bar is theater, but it makes the whole thing feel official, mandatory, like skipping it would cause a problem. This is not customer service design. This is behavioral psychology deployed to extract a specific piece of information from you before you think too hard about why they want it. And here is the most important thing to understand. They ask so persistently, so cleverly, because that number is incredibly valuable to them. Not to protect you, to price you. So once Marcus typed in that income, what actually happened inside the algorithm? Let's break it down. The first thing it did was recalculate his credit limit. Banks determine how much credit to give you, partly based on income, higher limit. And this sounds like a good thing: more spending power, more flexibility. But credit limits are not a gift, they are a tool. Studies consistently show that people spend closer to their credit limit than they plan to. A $5,000 limit gets used very differently than a $15,000 limit. When the ceiling goes up, spending tends to follow, not by the same amount, but it moves. And every dollar that gets carried as a balance is a dollar the bank collects interest on. The bank didn't raise Marcus's limit to reward him for his promotion. They raised it because higher limits statistically lead to higher balances, which means more interest revenue for them. The second thing is something called ability to pay pricing. This is the one that should make you genuinely uncomfortable. You might assume that higher income means you're seen as lower risk, and therefore you should get better rates, lower interest, better terms. That's how it should logically work. But here's what actually happens in many cases. Banks look at your income not just to assess your risk, but to assess your price sensitivity. Someone earning a strong salary is statistically less likely to spend an hour shopping around for a better interest rate. They're less likely to switch banks over a 2% difference. They're less likely to call and negotiate. So the algorithm, knowing you have the ability to pay more, sometimes quietly charges you more. Not because you're a higher risk, because the data says you probably won't notice or won't bother. This practice exists across many industries. Airlines do it, hotels do it, insurance companies do it. You're being charged based on what you can afford, not on what is fair. When Marcus updated his income, he told the bank exactly what he could afford, and they used that information to price him accordingly. The third thing is marketing reclassification. The moment Marcus's income updated, his entire marketing profile reset. He got moved into a new segment, and the products that segment receives are specifically designed around his income bracket. Premium cards with large annual fees, personal loan offers framed as financial tools, investment product pitches, wealth management services. Every login became a sales environment. Every email carried an offer. The relationship stopped feeling like banking and started feeling like being sold to constantly. Every one of those products was selected not because it was the best product for Marcus, but because it was the most profitable product the bank believed someone at his income level would say yes to. His updated income didn't help them serve him better. It helped them sell to him more precisely. Here is something that most people genuinely do not think about. When Marcus gave the bank his updated income, that number did not disappear after the pop-up closed. It did not sit quietly in a file somewhere doing nothing. It persisted. It moved. It got used in decisions that happened months and years after he typed it in. And it got shared within the bank's own departments and potentially with affiliated partners in ways that the privacy agreement technically permits, but almost nobody reads carefully enough to understand. That income figure Marcus updated casually one evening became a living data point in a profile that followed him through every interaction with that institution. And here's the piece that should really make you think. Fresh data is more valuable than old data to these algorithms. A recently updated income figure triggers much more algorithmic activity than a 3-year-old number sitting quietly in a file. The system treats new information like a signal. It wakes up, recalculates, retargets, reprices. That is exactly why they ask so persistently. Every time you update, the clock resets. You become newly readable. The algorithm gets fresh material to work with. The targeting sharpens. Every time you close that pop-up without responding, the data gets older, less predictive, less useful. The algorithm has to rely more on your actual behavior, your payment history, how you use the card, how long you have been a customer, rather than the number you volunteered. And behavioral data is actually harder for the bank to weaponize against you than stated income, because your behavior is what it is, but your stated income is a number they can immediately plug into a pricing model. The less current that number is, the more they have to treat you based on what you actually do rather than what they calculate you can afford. Now let's be completely clear about something, because this is important. There are absolutely situations where disclosing your income is legally required, genuinely necessary, and directly in your interest. When you apply for a mortgage, income verification is federally required. There is no way around it, and you wouldn't want there to be. Provide everything they ask for completely and honestly. When you apply for a car loan, most lenders require income disclosure and sometimes full verification. This is standard and appropriate. Cooperate fully. When you are first applying for a credit card, you will need to provide income information as part of the application. Be accurate. What I am not suggesting at any point in this video is that you lie or misrepresent your income. Providing false information on a credit application is fraud. It is illegal. It is genuinely wrong. Never do it. What I am talking about is a completely different situation. The persistent pop-up on an existing account asking you to voluntarily update income information you already provided. That is optional. Fully, completely, legally optional. There is no penalty for ignoring it. Your account will not be closed. Your credit score will not be affected. The pop-up will disappear and reappear in a few months, and you can close it again. The bank wants that update. They do not need it. And understanding the difference between what a bank wants and what a bank requires is one of the most practically useful things you can learn about managing your financial life. You are allowed to have privacy. You are allowed to decline voluntary requests. Choosing not to update information you are not obligated to update is not deception. It is a boundary. Let's get specific and practical. Here is exactly how to think about income disclosure going forward. When the pop-up appears on your existing account, close it. Just close it. No guilt, no anxiety, nothing will happen. Do this every single time it appears. Your account will function completely normally. The bank will ask again in a few months. Close it again. This is a completely legitimate choice, and you are fully within your rights to make it every time. When you want something from the bank, then consider disclosing. If you genuinely want a higher credit limit and your income has increased significantly, updating your income can support that request. If you are applying for a new product and a higher income improves your terms, disclosure serves your interests in that specific moment. The principle is simple. Update your income when it benefits you. Decline when it benefits them more than it benefits you. Be intentional about what income you report on new applications. If you have variable income, freelance work, commissions, contract work, you are not required to report your highest earning month. Report accurately within the guidelines, but do not volunteer more than is specifically asked. Focus on your actual credit behavior instead. Here is something genuinely empowering. If you pay on time consistently, keep your credit utilization low, and maintain your accounts over time, those behavioral signals build a strong financial profile that speaks entirely for itself. Your payment history is more powerful than your stated income in most credit decisions. That is where your energy belongs. Your actions are a stronger financial identity than any number you type into a pop-up. Let's come back to Marcus. 6 months after his promotion, after updating his income, after the credit limit increase, after the flood of premium card offers and personal loan pitches, Marcus started noticing something. Every time he logged into his banking app, there was something to close, decline, or scroll past before he could do what he actually came to do. It felt like walking into a store where every single employee immediately walks straight toward you. He didn't make the connection until a friend mentioned they had been quietly ignoring the income update pop-ups for years. Marcus looked back at the timeline. The aggressive marketing had started almost exactly when he updated his income after his promotion. He stopped updating. He closed every pop-up that appeared over the following months. Within half a year, his banking experience quietly returned to normal. The offer slowed down, the constant upsells faded. He logged in, paid his bill, logged out, the way it used to be. The bank didn't stop wanting his money. They just had less fresh information to work with. They treated him more like a customer and less like a target. Here is what I want you to take from all of this. Banks are not your enemy. They provide real services that make modern financial life possible. But they are also sophisticated, data-driven businesses whose interests are not always the same as yours. And they have spent years training you to feel like sharing your information is normal, expected, cooperative, and responsible. Some of it is. Some of it genuinely serves you. But some of it is a carefully designed pop-up with a fake progress bar sitting between you and your account balance, waiting for you to type in a number that will be used to extract more value from you than you realize. Marcus learned that the hard way. You don't have to. The next time that pop-up appears, you will know exactly what it is. You will know exactly why it is there, and you will know that closing it without filling it in is not paranoia. It is just understanding the game well enough to play it on your own terms. Your bank already knows a lot about you. You don't need to help them know more.